All right. Well, it is 9:04 Eastern, so we'll get started now. With some quick introductions, and then we'll hop into the agenda of the webinar. But my name is Jason Barraza, Head of Growth and Operations at Security Token Market, which is essentially the leading global oracle of data and media on tokenized securities for our industry here at stm.co. And so we track over 200 trading tokens every day, and they're trading data as well as the news and regulatory and new offerings and whatnot. So go ahead and check us out. But I'd love to introduce you to all of our fantastic panelists today and the agenda, of course. So today we'll be going through a message from DigiShare CEO Klaus Scanning, followed by Ari Kammer, founding lawyer of Com Law Professional Corporation. He'll be covering the legal and regulatory framework for tokenization in Latin America. After Ari, we expect to hear from Juan Pablo Borges, Socio Director and Managing Director at BY Estratégica. He'll be covering the basics of tokenization and its current status in Latin America. And then we'll hear from Blockhouse, both Juan Alvarez and Solomon about who will be talking about how tokenization can revolutionize real estate investments specifically. And after Juan and Solomon, we'll have Pedro Colaneri, Associate at Marvel, talking about Latin crypto regulation with a focus on Argentina, followed by Rubens Neistein, board member of Fibre, and covering an overview on the Brazilian real estate tokenization ecosystem. And then we'll have Rodolfo Malsberger, founder and CEO of Bymount, talking about tokenized forests for a sustainable future, empowering communities and investors. So after we hear from all of our panelists, we'll dive into a fireside chat that I'll moderate as well as an AMA. So feel free to drop your questions in the chat, and we'll be able to address those as we go along. So without further ado, Klaus, why don't you take us away?
All right. Thanks. Welcome everyone here today. This is, I think, the 10th installment of the DigiShare's webinars with the goal to sort of educate about tokenization and motivate the ecosystem around us to get into the space. Thank you very much to Jason from Security Token Market for facilitating the webinar today. And I'm looking forward to hearing all the speakers. Thank you also for your willingness to speak. The focus today is on Latin America and sort of the special legal issues and business developments we see in the region. And we have collected a group of speakers that can sort of give a status quo on that topic, I would say. We as a company get quite a lot of leads from the region and have also a good oversight of the legal side and sort of generally the status. And I would say it's developing really fast. We see a lot of interest, and there's, I think, huge potential in the region. So it's quite exciting for us to present this webinar. Yesterday we had a webinar focused on Southeast Asia, also a region where lots is happening, and also a region where sort of the legal and regulatory concerns are not really resolved yet, and where there's definitely something left to handle on the regulatory and legal side. In May, we'll have a webinar focused on liquidity, secondary trading. In the space, we'll have the leading exchanges, the leading security token exchanges speaking. I think it's on May the 15th. It'll be announced pretty soon. We are also going to Palo Alto, Silicon Valley in May to give a masterclass where we will actually be present physically, not virtually, and will be giving a deep dive into the tokenization ecosystem, speaking about the value proposition, the barriers to adoption, the status, use cases, and so on, and sort of presenting both DigiShares and also some of our clients and collaborators. And sort of speaking in directly to interested parties. We are actually right now doing our own fundraise. It's announced on the Security Token Market platform as well, and we generally work a lot together with the STM guys in business development globally. So it's a pleasure to have them sort of facilitate the webinar here today. In connection to our fundraise, we have announced recently a number of interesting partnerships. One is with Dwolla to facilitate US payments. I would say for anyone in the US who is interested in doing and receiving fiat-based payments into the tokenization platform, this is a way to do it. Also for clients requiring a custody solution, we work together with Fortress, was recently announced Fortress Trust in the US, and they can actually work globally if you're interested in a payment solution together with a custody-based solution for someone to safe keep your funds. Fortress Trust is a good option for that. And then we also have announced, we've sent out a couple of announcements recently on realestate.exchange, our own attempt at creating an exchange, is specifically for the vertical of real estate globally. So initially it will be launched in Europe, but traders globally will have access, and assets globally also will be able to be listed. So it'll be initially be licensed in Europe. We're working on getting the license for that and expect it to within a couple of months. And then the next step will be to get a similar license in the US, and that's expected, I would say, between 6 to 9 months from now, if everything goes well. So that's quite a significant development for us. So our white label partners will be able to list their assets on the exchange, but also anyone who has tokenized elsewhere will also be able to list their assets, and will initially be on Ethereum, I expect, and so supporting at least the ERC 1404 protocol, but possibly others. We'll see about that. I think that's it from me. I'm looking forward to hearing the presentations, and have a good couple of hours, everyone, and back to you, Jason.
Awesome, Klaus. Thank you so much for those words. For those of you interested in learning more about DigiShare's capital raise, I did include a link directing to an article or press release in the chat if you'd like to take a read after our webinar here. But we'd like to dive into our first speaker, Ari Kammert. Ari is a qualified lawyer in Ontario, Canada, New South Wales, Australia, and Turks and Caicos Islands. He currently has active practices in Ontario as well as the Turks and Caicos Islands. Now, he has worked as a legal professional and business founder in countries such as Australia, Singapore, the Philippines, and Brazil. Ari founded Calm Law in 2014. His intention was to create a non-traditional legal practice catering to individuals and businesses who seek a business-minded lawyer with creative, out-of-the-box solutions. Now, in Toronto, Ari advises companies and startups in all stages in growth, size, and notoriety, as well as private individuals. Ari has particular expertise with those involved in the technology, software, media, entertainment, fashion, and retail industries. And Ari also possesses a keen interest in real estate, both in Toronto and the Caribbean, and regularly asks for clients in a variety of real estate transaction and commercial leases. So Ari, welcome to the webinar. Thanks for your time. And I'm excited to hear from you on the legal and regulatory framework for tokenization in Latin America. Take us away.
Great. Thank you for that introduction. I'm just going to share a presentation that hopefully everybody can see. So yes, I am a lawyer. To some, that's a blessing. To some, that's a curse, because sometimes I'm a bearer of bad news, especially when it comes to the token and crypto and blockchain world. So I am currently based in the Turks and Caicos Islands in the Caribbean, and I have been advising projects, including my own project, in the asset tokenization space. I started really diving deeply into this in about 2018. When there was a lot of skepticism, uncertainty, and fear in the Caribbean, which is seen as a more traditional type of investment climate, and possibly Latin America and South America would dictate or follow some of these same concerns that we have in the Caribbean when it comes to this space. And in 2018, there was no laws, no regulations to assist somebody like myself and my clients who were looking at creative ways in which to facilitate financial technology, fintech, blockchain, and tokenization, especially in the real estate sector. So one of the guide, and I don't want to get too technical into the legal components. I want to have a more open and engaging conversation to see if we can get practical points out from the regulatory scheme. So The major guiding factor, at least in the Caribbean, seems to be the Financial Action Task Force, the FATF. There's a massive climate and fear over anti-money laundering and KYC and anti-terrorism financing. You know, there's the Panama Papers that came out, and all of this is a live and real challenging thing to navigate. And regulators here, which are small in capability and budget, don't want to be seen angering the bigger financial world with things that they do domestically. So they're very cautious to be compliant with the FATF. And the FATF, some may know, have issued guidelines on virtual assets from 2021. And I think in the Turks and Caicos anyways, and I'll get into who has and has not legislated in the VA space, they're kind of guided by the FATF's guidelines specifically. And, you know, what is a virtual asset? Are people in the tokenization space of real estate dealing with a virtual asset, or are they merely dealing with digital representations of an already existing type of instrument, whether it's a security, some sort of other existing financial product? Sorry, just so there is a couple of sections in the FATF guidelines that can assist regulators in determining what is a VA and what is not a VA, and this becomes important later on. And if the FATF clearly doesn't intend for an asset to be both, it's either a virtual asset and that thus can be subject to a virtual asset law, or it's an existing financial product like a security, and existing securities laws or company laws can sufficiently deal with that asset or sale of shares or the tokenization of, say, a real estate asset. So one key thing to realize is that if there is no domestic legislation, there is no securities laws, or there is no virtual asset laws that deal with, say, an issuance of shares in a crowdfunded effort, then there's really nothing actually prohibiting that practice. But also, it's a double-edged sword. There's no real investor confidence that could be put behind companies that are operating in an unregulated space. So this is a list of about 13 countries in the Caribbean, and I may be missing some because it's changing all the time, that have actively either legislated in the virtual asset space or have policies and guidelines or sandboxes for fintech companies that are trying to enter into the space. And we can see that's a pretty exhaustive list of countries, and that's a pretty, I'm going to say, aggressive point of view in the Caribbean specifically to regulate the space and possibly attract companies to come there and set up operations. I mean, in North America, for example, nobody has regulated specifically for the blockchain or virtual asset space. They're relying on existing securities laws to fill in the gap, in most cases very expensively. And the Caribbean has taken a very proactive approach to kind of differentiate itself in the financial markets, I'd say, to facilitate this new innovation. Key takeaways from the legislation, or for some of these places you will see listed, is that some don't have domestic securities laws. So the virtual asset law kind of filled in that gap for fintech companies. And we don't have concepts. I know many of you may have heard of the Howey test. There's no concepts like that that exist in the regulatory space in the Caribbean, where it's this general catch-all that would make you a security or not a security. It's very purposeful. So you would notice possibly in this list that my country of Turks and Caicos is not mentioned, and I'll discuss how we treat that unregulated country and how we are approaching our token offering. So again, it's the Cayman Islands, Bermuda, Barbados, the Bahamas, Trinidad, and most Eastern Caribbean bank member countries are in this list of legislative who have legislated. And you will notice by the years of these acts, this is all within the last 2 to 3 years, and there's more coming online. So everything is changing very, very rapidly. The Eastern Caribbean, which is a central bank, has really taken a lead on proposing a draft legislation, really taking points from the FATF guidelines in its recommendation. And every country in the Eastern Caribbean, save for Montserrat, so St. Kitts and Nevis, Dominica, Antigua, Grenada, have all come in line with their own domestic virtual asset legislation based loosely on this ECB draft. The Eastern Caribbean also does have a CDBC called Dcash. And so for those who are trying to enter into the space in the Caribbean, not only is there the ability to create companies in the space, there's also the ability to have a virtual currency. You know, people have different opinions on CDBCs, but there is that ability for the investor to on-ramp with fiat into the, into the crypto space, and then off-ramp, get liquid cash if they want within the Dcash system. Bahamas has their own version called the Sand Dollar. Trinidad and Tobago has e-money, and Jamaica is now experimenting with its own version of a CDBC. So things are rapidly coming online throughout the Caribbean. Now, I don't want to speak for South America and all of Latin America, but I think the challenges translate throughout. Whereas, it is an area, and the Caribbean specifically has approximately combined a massive population of 50 million people. And the way I see it is that most people in the Caribbean have a very challenging time with accessing capital and being included in the ownership economy in the countries in which they reside. So property ownership is a real challenge. Access to financing becomes a real challenge, especially for those in regional and marginalized areas. I think what is true in Turks and Caicos might be true in Chile, might be true in Costa Rica. I think that there is the domestic indigenous population are typically shut out. And so what does that mean? And I think that it means that there's a massive opportunity to leverage platforms of tokenization to democratize as much as possible, inclusion into the ownership economy of the country as little as fractionally as possible. And the laws are being aggressively put in places in the countries in the region, or guidelines established to facilitate companies to encourage this type of financial, and Trinidad and Tobago is taking a very aggressive, inclusive economy through their fintech hub. So in the Turks and Caicos, while we are a small country of 45,000 people, we have had significant growth in the last 3 years specifically, in which case most of our property is foreign owned. All of the hotels, the prime beachfront land, most of the villas are not being built and are not being invested in by the indigenous Turks and Caicos population, just because of pure financial realities. And some, the real estate in the Caribbean and in stretches of Latin America, especially on the Caribbean and Pacific coast, are some of the most expensive real estate in the world. So you're coupling unimaginable costs of entry with some of the most challenging economic entry points for the population as a mass. So, there's a massive gap there in which regulators are trying to solve. Most of the domestic legislation, most of the Caribbean is aimed at inbound financial services companies setting up to service outside interests. There's a very small amount that are, and I'm speaking in specifically and possibly the British overseas territories like Cayman, Bermuda, BVI, and Turks and Caicos. There's very little focus on inbound growth and inbound inclusion. So we have a recipe for disaster in Turks and Caicos, what could be mimicked in other Caribbean countries, is unimaginably high cost of entry for a populace that has very little bit of borrowing and financial access to capital. So in Turks and Caicos, how do we solve these issues? What is happening around us? We have no virtual asset legislation. We have no securities laws domestically, but we have a companies ordinance that is about 60 years old that does permit a public offering shares through prospectus. So what are we doing? We are, working with the regulator. And the regulator is not, has its own high to cover in that it doesn't want to be offside of AML laws. So it's struggling to find out if, one, we are a virtual asset or not, because if we are, they don't want to touch us. If we're a share, then we can work with them to file our prospectus to include the public. So right now, we have successfully filed a prospectus for the public sale of shares in the Turks and Caicos Island without restriction, which I think is a huge win, which will allow the indigenous population living within the Turks and Caicos Islands to participate in the ownership of, say, a real estate project. And we have one, which is a townhouse. It's a small project and 450,000 USD. And you can buy in as little as $45 per token or share. And it's the same, and that's kind of the model. And then there's a peer-to-peer trading system, which we're leveraging off the back of the DigiShares platform. And the regulator is working with us very, very intimately to make sure they understand what we're doing and what's happening, but also to be seen as innovative and, not falling behind in the region in their approach to, these new technologies. So, I think it's difficult to give a snapshot of what's happening everywhere, but the region, I think the challenges are the same. Regulation is coming quick and fast. In the Caribbean, countries are creating domestic legislation possibly aimed at outside interests. And in South America, that might be very different. For example, in Brazil, regulators might be concerned with domestic investors and domestic companies more so than they would be what's happening with what we call jurisdiction shopping clients in the Caribbean. And regulators should not really be feared. I think they just need to understand what's happening and work with, and could sometimes be very open to address that if they are not at the forefront at working with innovative companies like ourselves, and lawyers and technologists and business people to fill the gap in a market that now has the tool to fill that gap. I mean, there's real solutions with platforms that are coming online off white label solutions for DigiShares to be able to include and look inward for once at, a population of, millions of people that are just not being paid attention to. So I think there's an opportunity there for everybody. And, I look forward to participating and answering questions later on. And I think that's all I have for what I have to say at this current point in time. So hopefully that's been insightful to some people.
Very nice. Thank you so much for that, Ari. I think that's invaluable, help and insight into what's going on right now in the regulatory framework of Latin America. And it's very important to understand not just Latin America in general, but also a little bit more specifically within specific jurisdictions. And I'm glad to see that some of those jurisdictions are going to be collaborating on some of this. So we do have a couple questions coming in, but we'll reserve those for the AMA section of the webinar. And so, keep bringing in your questions, guys. Just make sure to specify who or which panelist this is for, and we'll be, ready to answer those towards the end. So moving on to our next speaker, we were supposed to have Juan Pablo Borges, but it seems like he may have not made it today. So we'll move on to Blockhouse. Okay, so we have Juan Alvarez. Juan is an experienced real estate broker and investor with 17 years in luxury and commercial real estate in South Florida and New York. He holds a master's degree in international real estate, a master's degree in finance, and a fintech certification from Harvard University. He is a member of the board at Hall School of Real Estate and Real Estate Development Committee of the Bain Real Estate Council, or BREC. Juan's focus is on real estate investment opportunities for clients seeking high-end luxury, residential, and commercial properties such as multifamily buildings, strip malls, office buildings, and triple net properties. He analyzes the market with a personalized approach using research and data, bringing clients and customers an edge and confidence to make sound investment decisions. In recent years, Quant has been focused on understanding fractionalization, democratization, and tokenization of real estate while building a prop tech to manage tokenized assets, easing reporting and distribution of dividends. And co-present with him today is Solomon About, blockchain manager at Blockhouse. Why don't you take us away, guys?
Hey, how are you guys doing today? Good morning.
Good morning.
Jason, thank you for such an amazing introduction. I didn't thought so many things about myself. But yes, we're happy to be here. Salomon flew from Colombia a couple hours ago just to be able to be sitting next to me. And I will actually I will make a quick introduction of what we've done, where we are, and then I will let Salomon kind of like go through the details of this amazing journey of real estate tokenization that started for us almost 2 years ago with the collaboration of Security Token Advisors, which were our first consultants who helped us understand many factors that need to be taken into account before we consider going into tokenization. It took us 2 years to get our first tokenization in place. We were the first real estate brokers in Miami who tokenized an asset that was actually sold in fractions to people in South America. We used that first tokenization to learn and understand what it means to tokenize and if the market was ready or not to accept this new technology and way of acquisition of real estate. We use this first tokenization to also understand what needed to be done to push tokens through the Latin American communities. We learned that people is not ready to spend a lot of money in anything that's a digital asset yet, even though real estate throughout the years and historically is that asset class that people tends to see with more security than anything else. People wasn't ready to spend more than $100 to try and to see what needs to be done to open a digital wallet, apply for AML, KYC, and so forth. Can we see? Oh, I'm sorry. I see some message. I got distracted a little bit. I was taking a look at the chat. I'm sorry, I got distracted. So we learned a lot, and we're still doing A/B testing. And now that we know many things about regulation and what people is actually considering option or not, we're ready to push bigger tokenizations, but we are not ready to decide how to market and sell the tokens at a scale so that we can actually leverage on the technology to get rid of tokens automatically within less than a month. Let's say liquidate $5-10 million worth of real estate tokens. So I was kind of like in the back lines observing what was happening in the crypto space for the last quarter. Happy to see that the government is pushing now through FedCoin and FedNow a program where there will be massive adoption. Basically, in essence, the US government will be pushing the tokenization of the US dollar. And through tokenization of the US dollar, people, the common people in the United States will be able to download an app and get stimulus checks or money from the government or money from the government through their e-wallets that they will be able to spend. And this will actually help people understand better the concept of tokenization, more fintech solutions, massive adoption, which will help us push through. So we're not the only ones kind of like trying to open space and understand. And I feel like this is huge. We were invited to be part of the pilot from the government that's starting next month. Let's see if we can actually make it. Hopefully we will. And I feel like this year will help us get closer to what this technology can provide. So I will, without further ado, I will let Salomon make an introduction about himself, what we're doing now, how we see the market, and what we can do to collaborate in this space where there is a lot of smart people and people who's in business trying to jump in, and how we can collaborate and help each other.
Awesome, man. Hello, everyone. So I'm Salomon. I've been working with Juan for around like 3 years already. So everything that Jason just mentioned for Juan, I've been kind of part of this for the past 3 years, like learning a lot from the real estate industry, the traditional real estate industry, as well as the tokenization of the real estate industry. As Juan was saying, one of the first brokerages here in Miami that started tokenizing. So just to like go back to the initial question from the panel, like how is tokenization revolutionizing real estate? I guess I just want to do like a quick I would say introduction from where we were 3 years ago and where we are today. Having done this tokenization that Juan was speaking about. And I guess one of the biggest points of revolutionary, I would say, like, or I would, let me rephrase that to one of the biggest points that we can revolutionize with tokenization is actually the possibility to allow these Latin American countries to actually access real estate in the US, right? Which is kind of the most difficult part to some of these people. And going back to the traditional brokerage, we were 2 years ago or 3 years ago, we were having clients. We are both from Colombia, so having a lot of clients that like our natural network from Colombia coming to the US. Trying to invest in different types of assets. And we had high net worth individuals in Colombia that were doing it. They were getting ready for, you know, political turmoil that we are seeing today. These were very savvy investors. And they started to make these small movements towards the US. But little by little, we started seeing how these people, you know, the one person that had $500,000 in order to invest in the US. In 6 months, that same person had, you know, with the same capital in Colombia, probably 400,000 to invest in the US, and then 350,000, then 300, and then also prices start to go up here in the US, and especially in Miami, as we saw after the pandemic. And then a lot of high net worth individuals that were bringing their money to the US in order to safeguard their equity, their savings. At some point, they were not being able to do so efficiently, right? They were, you know, we had to start looking for smaller assets that were probably not very attractive, that had other difficulties. And that became a very big pain point for these users, right? Or for these clients. And so since that time, as Juan was saying as well, we were talking to the security token advisors, and we were structuring how we could start doing this new or applying this new concept of tokenization into real estate, which at that time, I guess there were very, very, very few participants in the market. It was a very fresh concept. There were a lot of variables that we didn't know, that we didn't imagine at that point. And we started working on that. Eventually, you know, like talking to people, doing the famous like go-to-market strategy for a small startup, where we started like just interviewing our clientele and saying, hey, would you be interested in something like this? Does this sound like an investment that you will be willing to do? And of course, the answer always was definitely, I want to do it now. And so that was kind of the push that we had at the beginning to say, okay, this is the future. This is what we need to do. And so we started with effectively like executing that project, bringing it up to speed with a property here in Miami, which was in Midtown Miami. It was an apartment that is used for Airbnb rentals. It's one of the few buildings in the area, or probably the only building in the area that allows short-term rentals legally. That's very important. And so we started testing the market with this, in general, Latin American investors. Of course, Colombia still was a very attractive market for us. Just testing out the model, we effectively tokenized the property, and we started selling tokens. And I guess here is where, you know, we basically faced a huge wall, right? We had all these clients that said like, yeah, sure, yeah, I will invest. Like, this is definitely, I mean, it's like investing in real estate, all the benefits of investing in real estate, but with a lower ticket, or a lower investment ticket. So we started at $1,000. That was the minimum investment. And suddenly people were not investing. You know, they were hesitant on what is a token, right? How does this work? How am I going to be taxed? How do I liquidate this token? And of course, there's always the promise of liquidity, right? And that was one of the things that we used to mention, where, you know, you are providing liquidity to investors in real estate by being able to liquidate your fractions in a secondary market. But of course, adoption was not there. So that's been our path so far, like trying to
The creation of the Blockhouse University, the set of videos,
exactly
educating people to make sure people within 10 minutes of observing or watching our YouTube channel videos will feel comfortable going to our platform, doing KYC, going through the process, and actually making a payment with a credit card, with crypto, or with fiat, and people wasn't actually pushing through. So definitely, you know, tokenizing is not the issue. The issue is pushing those tokens through the community. So the adoption of the technology is the biggest hurdle. And as a company with a business model and all the financial projections to be still.
Yep. So I don't know if should we like answer this question?
In a minute. What I'm trying to say is the concept of real estate tokenization in South America, in our opinion, is at its infancy. You know, we feel there is a few players, many people jumped in and did it illegally, did it outside of the SEC rules, and some of those companies are already out of business already and are being questioned about other business practices, thinking a DAO in the Philippines will, you know, it doesn't work like that. You have to do it legally through SEC approvals and so forth, like we did it. Tokenizing an asset is not difficult. There is an amazing platform and technology provided by DigiSearch and Cloud Scanning, his company. If you need advice, security token advisors will help you understand what you need to do. There is a bunch of real estate attorneys and securities attorneys who can help you understand what you need to do. But in my opinion, think twice before you jump in, because it's not easy. There is still a lot to be clear, and definitely this massive adoption that will be pushed through the U.S. government from with the Fed coin and FedNow will help us get closer. If you are looking to tokenize, we can talk about it. We can look into the asset. Definitely, the yields or the dividends that to be paid to the investors need to make sense in order for us to push through, because there is a huge investment, economical investment to mint an asset and convert it into a digital asset and push it through. But if it doesn't make sense, people will not buy it. Even if we make 1,000 phone calls, people will not buy the token. So just to complete what someone was saying is a concept that's huge. Is the future of the industry, but we need a couple of years and a couple of big milestones to be passed before we can talk about real estate tokenization as the way people will buy and invest in real estate in the future. It's coming.
It's coming. Yeah, it's very close. Once we hit that adoption, like critical mass, then it's gonna come our way. I mean, it's gonna start growing.
What are the numbers? What's the market size for real estate tokens, and what's the size of the what's the volume of transactions, so people can understand how exponential this is, and how this will actually will be translated into a stock market, bonds market, debt market, and so forth.
Yeah, so I mean, Jason will correct me if I'm wrong, but last time I checked, it was 15 billion still, like the token at the secondary market for security tokens. Of course, the primary market is probably 3 or 4 times bigger than that for the tokens that are still waiting to come to that secondary market. But definitely we have to hit that critical adoption in order for this to start actually growing and making sense. But in general, it is a solution that will allow people from all around the world to be able to access easily real estate in other places, right? Especially, and just to answer that question real quickly from Eduardo, I think it's literally people from Colombia could use a credit card to purchase a token, and that way they didn't even have to like care about, you know, the conversion for Colombian pesos to US dollar. They could also do it via crypto, where they probably had a Coinbase or a Binance account where they purchased USDT or USDC, and then they could also transfer that crypto. So it's about breaking those barriers and allowing people that were traditionally excluded from this market to now be able to access it from as little as $100 or $50 as we've seen other platforms do, and basically automating all processes that will make it possible to basically manage this huge number of investors, right?
So the question is, how are your Colombian investors able to buy these tokens from Colombia? We accept credit card.
Yeah, we take credit card. They can do a regular bank transfer, or they can use cryptocurrency.
Okay.
So
then the second question: can you walk us through the process for a Colombian investor? Do they need legal structures in the US? Do they exchange Colombian pesos to USDT? Those are easy questions. The second one: can you walk us through the process?
yeah, basically, I mean,
KYC,
once you, yeah, of course, this is part of all the security token or the securities industry ecosystem, where the first thing that an investor will need to do is pass a KYC filter, a KYC AML filter, where they would put all their residence information and personal information that will allow us to know if that person is in some blacklist or if the person is not a not wanted individual, right? So that's the first thing. Once they pass that test, it depends on the jurisdiction, of course. If it's in the US, they would need to also confirm that they are accredited investors. Otherwise, from Colombia, they don't need to be accredited. This is through another regulation, which is Regulation S. They would then simply pass that KYC and then be able to start investing. Then they would go to the marketplace, find the property that they like or the pool of properties that they like, and they can choose how much to invest. And it's that easy. They can start with as little as $100. They pledge the amount that they want to invest. They sign a subscription agreement, which is also part of the of complying with the regulation from the SEC, where it's all the risks and all the information, the legal detailed information from each specific deal. And once they sign, they are ready to actually invest. And that's, as Juan was saying, they can invest using either a credit card, which is kind of the easiest solution and then the most adopted solution for our clients. They can also do a wire transfer, or they can pay with crypto.
Before we jump to your next question, Eduardo, allow us to finish the first one, because now you're asking about legal structure and taxation.
So Jason, I don't know if we have time, or is this like
Yeah, so we are just a little bit over. So why don't you guys finish your final thoughts? And then I am writing some of these questions down for our AMA section later on. And I do definitely have a few as well of my own. So we'll definitely revisit some of these as well. So just finish up real quick, and then we'll move on to our next speaker just to make sure that we're on schedule here.
Yep. Perfect. So yeah, just to wrap it up, and then we can keep discussing at the end if something keeps being unclear. So in general, an investor outside the US doesn't need any legal structure in the US. And of course, this will all depend on the structure of each specific deal, right? So there are deals that will probably require you to have some sort of structure. In our case, any investor could come to an offering without, it doesn't even need to know anything about taxes, or because it's all taken care on our end, right? So that's like the value proposition. The investor doesn't need to worry about if like it's gonna present taxes, it's gonna have some legal trouble in the US. What we do is through a corporation that owns the asset, we, in case of a specific, in the specific case of a Colombian, we would do a withholding from the dividends that are distributed, and that's how we ensure that we are paying taxes here for what the investor is required to, and then we just distribute the remainder to the investor, and it can be distributed both in crypto or fiat, right? So it depends. Of course, the easiest way and the most blockchain based way is doing distributions with USDC, for example, which can be automated. And of course, this is like the closing of the process, where for us it's also easier to manage an investor, given we don't have to manually go and say, oh, I'm going to do a wire transfer to Eduardo. I just say, okay, automatically the taxes are withheld, and then it's distributed to the investor. So I guess that's how we can wrap this up, and then we can keep discussing later. So thank you all.
Awesome. Thank you so much, guys. That was very informative. Love learning a lot about, specifically how this impacts real estate, and the fact that you guys are making this as frictionless as possible for Latin American investors to try to both understand more about what the landscape is and how to invest, as well as when it comes to actually executing on this. It sounds like you guys are taking the appropriate steps here to make it as easy as possible for these investors to be able to participate. We'll definitely dive into more questions at the end with every single one of the panelists. So we're going to move on now to our next speaker, Juan Pablo Borges. So with vast multidisciplinary and international experience as an economist, lawyer, banker, counselor, and advisor, Juan has worked in corporate banking with Continental Bank and investment banking with Midland Bank, PLC. He was chairman of the board of Endesa between 1997 and 2003, a company listed on Santiago Stock Exchange. Juan's expertise lies in banking and finance, negotiation, complex conflict resolution, energy, international business, strategic advisory, and corporate governance. He is currently socio director and managing partner at BY Estratégica. Juan, thank you for joining us. We are excited to learn from what your perspectives are. So why don't you go ahead and teach us about the understanding of the basics of tokenization and its current status in Latin America.
Well, thank you very much, Jason, for that such a complete introduction. And I don't know if I can show my screen and share with you a very short presentation. Let me see if I can share my screen. I assume everybody can see my screen.
Yes, sir.
Okay, well, first starting with the title of this presentation, I think it's a rather presumptuous on my side to speak on tokenization in Latin America. I can hardly say something smart enough about what's going on in Chile. So I do make that sort of disclaimer. And I decided to title this for tokenization in Latin America, and trying to refer mostly on the real estate side. Is it a myth or is it reality? And in saying that, well, it's been lots, at least in this is the case in Chile, it's been lots of fanfare or firework, and this is something that appeared recently in the Chilean TV. So it talks about the sort of debut of real estate tokenization in Chile. And I say fanfare and firework, but because I think we're pretty away from that, it's more myth than reality. So what in my view, well, the promise of tokenization, it's basically trying to fractionalize an asset. You aim at fractionizing and stripping that asset in various portions. In theory, it makes the access to owning that asset more democratic. So it's democracy versus, I don't know, exclusivity. It should bring more liquidity, because the deeper the size of the buying power, the more liquidity you have for that market or for that secondary market. So therefore, it becomes much more efficient. Capital markets become more efficient. And technology offers the final two attributes, which is basically a significant reduction in transaction costs, and it provides much more security and transparency. That is the promise, basically speaking, about tokenizing an asset in any context, not only in Latin America. And the challenges you face whenever you contrast the promise to reality is, well, at the end of the day, what do I own? Is this an asset-backed currency, quote unquote? What are the determinants, or what determines the value of that asset? There are also some governance issues involved. How do I sell that asset? I mean, in the investment sort of thesis, whenever you invest in the type of in this sort of asset, how do I generate the yield? How do I make that investment profitable? And in most of cases, or in many cases, the yield is produced, is generated because of the sale, the capital gain you make once you sell the asset. So there's a governance issue there. Well, how do I decide, or what are the rules, or how can I sell the asset? And getting in more deeper waters, you have also taxation issues, and not to speak about all the security sphere, public offering et al. So I think that's the contrast between the promise and the challenges. What's our view? I think our view, and this is probably part of and this is more a bit of playing the devil advocate role, and a bit of my own bias of where I come from and my own background. But we see this more than as an improving an old wheel rather than inventing a new one. I think that the benefit of digitization, and its fortitude is something that needs to be unveiled. And I say digitization and blockchain. So and digitization and blockchain can no question improve the required legal certainties that are required for this type of assets. And I mentioned the ownership title. I mentioned tradability of the asset, and I also think and what we're focusing in is basically trying to make the informal more formal, and bringing a stronger institutionality into the arena, so that this assets, the generation of these assets may effectively work. And this is pretty much consistent with what I heard with the people that preceded me in this presentation, which they were thinking, how do I generate volume at scale, the critical mass? And well, there's not much new to be said, rather than as the Roman used to say, meum et tuum. I mean, that is yours and this is mine, and men make rules to protect property. So the way we see it, and the way we see this coming forward is basically leveraging on the strengths of technology to make the old wheel a better wheel, and that implies using these platforms to make what is done today much more efficient at a significant lower costs, and taking the route for fractionalizing the ownership on that type of assets on that basis. That's our view, and of course we're more than happy to have any questions and answer any questions on this respect. Thank you.
Fantastic. Thank you. Thank you. Audience, as you know, keep bringing in your questions. We're definitely compiling a list here. So without further ado, we're going to be moving on to our next speaker, who is Pedro Colaneri of Marval. So let me just pull that up real quick. Okay, so Pedro joined the firm in Q4 of 2021 due to his keen knowledge of the cryptocurrency space. Upon joining, he worked in the structurization of a wide variety of crypto projects, comprising mainly the tokenization of real estate and private equity. Besides, he deals with crypto exchanges and the various queries we receive. He is familiar with regulations that affect crypto players, such as financial law, capital markets law, and money laundering law, among other branches of law that he applies in his daily work. Within Marval, he also provides pro bono advice, mainly in matters related to money laundering issues that NGOs may bring for consultation. So thank you for joining us, Pedro. Let us, talk to us about Latin American crypto regulation with a focus on Argentina.
Thank you, Jason, for the introduction. I don't know if I have to show my face or not, but I cannot initiate video. So if you could do that for me. Prior speakers, I think that had a good briefing of everything going on in Latin America. So I'll mainly focus on Argentina. I will share a presentation that is just for, let me see the whole window here. Well, just let me know if you cannot see my presentation. I think that, can you see it?
Yep.
Okay, well, as it might seem from my picture and the buildings there in the background, I'm a lawyer. This is kind of lawyer stuff. So I work in Argentina's main law firm. We are celebrating our 100th anniversary this year. So we've been around quite a lot in Argentina, and we mainly deal in my team with fintech issues, and within fintech, we deal a lot with crypto assets, digital assets, and tokenization. Well, finishing this brief introduction, I will say that in Argentina, we do not have any specific regulation regarding digital assets. We have some AML and tax regulation, which provides a broad and somewhat unclear definition of what a digital asset should be considered. AML regulation says that digital assets are virtual currencies, and by virtual currencies they say, or they refer to anything virtual or anything related to value and blockchain. So it's quite a broad definition. And as to tax regulation, we have some taxes because Argentina is quite innovative in fiscal matters, and we tend to create a lot of taxes to a lot of things. So we have income tax on income generated by investing in virtual currencies, and then we have some minor taxes on the transference and on the investment of digital assets. But besides that, we have no regulatory framework as to digital assets in the likes of, I don't know, Switzerland, Liechtenstein. We do not have that type of regulation. So for the time being, we're managing ourselves with the other Argentine regulation. This is our civil and commercial code and our capital markets law. Well, the first thing, as the prior speaker said, the first thing to have into consideration is that according to Argentine regulation, any digital asset could be eventually subject to the regulation applicable to securities. So we somewhat have a regulation regarding these new assets, because our Argentine capital markets law provides for a very broad definition of securities, or valores negociables. And we have seen the regulator put into force certain measures against, for example, crowdfunding products or some other innovative investment products, but still not tokens. The only precedent we have regarding a cryptographic token is a virtual coin that was involved in a series of criminal activities, and that's why our regulator, the Argentine Securities and Exchange Commission, decided to intervene. But in that respect, or in that precedent, our Securities and Exchange Commission did not say that virtual assets are securities. Well, as the prior speaker also introduced, you have to see or to analyze the concept of public offering of securities and of securities. Well, as I previously said, securities has a broad definition, and also our public offering. We do not have the concept in the likes of US regulation that if you sell to a determined amount of people or in a determined way, you'll not be deemed a public offering. In Argentina, the concept of public offering is really wide and really broad and really indefinite. So when providing advice or when analyzing certain crypto offerings, we have to be really vigilant about this concept, because for something to be compliant with Argentine regulation, you have not to be a security and or not publicly offer said crypto. So if a digital asset were to be deemed a security, you will not be able to offer it in a public manner, but you will be able to offer it in a private manner. On the other hand, if you want to publicly offer something, that's something that crypto asset should not be a security. Well, Argentina has had many bills that did not pass into law through the years. We introduced our first regulatory framework in November 2020, but that bill did not pass into law. I will not revisit all these bills because they are all related to crypto, but not in the sense of a regulatory framework. For example, we have a crypto mining bill, a tax bill that was promoting the crypto mining industry and renewable energies, and we have our latest bill that is the one that has the most chances of passing into law, is our bill to modify the anti-money laundering and fighting terrorism law. I would say it's our most advanced law, because we are receiving the visit of Gafi, which is the global regulator or global council for all things AML, and we are receiving it next year. So some experts state that we need to have a regulation on money laundering regarding crypto. If this regulation were to pass into law, exchanges and several other players of the crypto industry will have reporting duties before the Argentine Financial Information Unit. That is similar to the US FinCEN. It's another typical AML regulator. Well, some brief comments on the digital asset state of affairs in Argentina. We have Argentina is a federal country, so we have lots of different local regulations as to the acceptance or the introduction of digital assets into the economy. For example, Argentina's province Mendoza decided to become the first province to accept digital assets to pay for taxes. So this is a brief comment, but in Argentina we have like provinces or states that are not crypto friendly, and we have some others that are crypto friendly and are trying to push legislation in order to broaden the acceptance and the utilization of digital assets. We also have a federal blockchain council that we still are waiting for some activity from said council, but this council was put into place mainly to develop blockchain technology, because Argentina is we export a lot of technology from Argentina. We are kind of a technological hub. We have big companies such as, I don't know, Mercado Libre and certain tech companies, and we have a lot of more like startup companies that most of them are now introducing themselves to the blockchain sector. That's why we created a federal blockchain council, and in this council I don't know if the word is foreshadow, but I forecast mainly that lots of technological advances and aspects of this technology will be developed. More of a scientific approach rather than a regulatory approach. Well, then we have another innovative, I don't know how to strike. I don't know how to say it. It was put into place by the CNB, the Innovation Hub, and mainly the CNB's, the Securities and Exchange, the Argentine Securities and Exchange Commission Innovation Hub deals with all new and innovative investment product proposals. If you have an innovative investment product, you can go before the Innovation Hub, and they will determine if that investment product is compliant of the Argentine Securities Exchange regulation or not. This Innovation Hub has its downsides because the resolution that created it stated that applying for the hub or for the assistance of the Innovation Hub has its risks. Let's say it in other words, it's not that if you apply for the Innovation Hub, you'll be granted approval and you'll be granted immunity before the CNB. Is somewhat contradictory, but we had some proposals. We not as a firm, but we have knowledge of some proposals, and of those proposals, the most this is a rather new one, but the most innovative one was this Bitcoin index futures contract that is an investment product that allows accredited investors, which are, I don't know, financial entities, public entities, and individuals that invest a lot of money, that allows these accredited investors to invest in Bitcoin without holding the asset. These Bitcoin indexes are manufactured according to the prices that are informed by the exchanges, and with those prices, they, as I said, they manufacture these indexes, and we can have an exposure to Bitcoin. This has some advantages because there are certain players of the financial sector that are somewhat afraid to invest in digital assets because of regulation from their supervisors. For example, financial entities cannot invest in digital assets because of prohibition of Argentine central banks. So this type of investment products could allow for institutional money to enter into the sector. Well, I had some words on the general regulatory framework in Latin America, but I will pass this part because prior speakers spoke about this, and I will open the mic. I don't know if now's the moment or not for for questions. If someone has a question about what I just spoke.
Yeah, we have about a couple minutes left on your section if anyone has a question here. Otherwise, we can go to 2 more speakers that we have left, and then we'll have the open Q&A and fireside chat.
Jason, just in case, I will not be available for the open Q&A. So if someone has a question for me, this is the time. I have to go to another meeting, unluckily.
I think my question for you would be, you mentioned that there's no clear regulation here, right? So it's more of a wait and see approach. So how are issuers currently approaching this themselves? Is it more like they're playing it safe and trying to abide by current securities laws, or are they being a little bit more of a let's be more exploratory and ask for forgiveness rather than permission? What would you say the attitude is from the issuers in Argentina?
It depends on the issuer. Startup issuers rather go for the ask for forgiveness rather than permission, but more institutional players which have more to lose or have more money set in Argentina, for example, startups might issue from, I don't know, Central America or a crypto-friendly jurisdiction, but those issuers do not have a lot of presence in Argentina. Issuers that have a lot of presence in Argentina opt for a more compliance approach because they have to have certainty, mainly for their investors, that their product is not violating the regulation. But you should not forget that despite issuing on a foreign jurisdiction, if you want to offer said, I don't know, imagine the tokenization of real estate, I don't know, in Mexico. If you want to offer to Argentine investors, you'll have to be compliant with our regulation, mainly if it was deemed a security, Argentine securities regulation. So in our daily work, what we do is try to assess on whether a certain asset is a security or not. And from that point on, we say, well, the next steps are these. We have participated in issuance and also in offerings, and it's part of our daily work. But I would, if someone was interested in issuing from Argentina or in offering Argentina, that seeks for legal advice, because the Argentine Securities and Exchange Commission has some hefty fines, and some including, apart from the fines, you can have criminal prosecution. And we still have not seen any token issuer being criminally prosecuted, but we have seen some fines to some innovative products, not particularly digital assets, but not typical securities.
Gotcha.
So my advice for you is that go with your lawyer of choice, ask the correct questions, and good luck. There's always risk involved, but I feel that it's a good approach to seek professional legal advice, mainly in this matter that it treats with the people's money and resources.
Absolutely, makes total sense. And just to reiterate for the whole audience and future viewers, obviously none of this is financial or legal advice. We're just giving our opinions here on what we're seeing in the markets, and especially as it relates to different jurisdictions. But yeah, definitely always do your own research and consult your lawyers, CPAs, and accountants and whatnot to make sure you have the best approach as possible. So thank you, Pedro, so much for your time and for those insights on Argentina. We're going to move into our next panelist, Rubens Neinstein. Rubens is an experienced strategist and expert in blockchain applications for businesses and real estate. He has a strong background in mentoring startups and digital businesses, and has partnered with major entrepreneurs in the Brazilian online market since 1999. Now, over the past 5 years, he has focused on promoting blockchain technology and the digital assets market, working towards the development and dissemination of new technologies that will transform the way we deal with money and trust. Rubens currently holds board positions at Fibre and Ribus, and is co-founder of Insignia. So Rubens, give us a talk on the Brazilian landscape.
Sure. Pleasure to be here. Well, I'm going to focus now. All my colleagues, they already talk about, regulations and all that stuff that it's around us in each country that we intend to tokenize assets, real estate assets or real assets. I'm going to focus a little bit more on how the Brazilian market has been developing in this area. I'm going to share my screen with you all. Just a moment. Here it is. Okay. Are you all seeing that? Great. Just a moment. Let me put this down. Okay. So, so an overview on the Brazilian real estate tokenization ecosystem. Today, I'm going to use two hats. I'm going to talk a little bit about Fibri, and I'm going to talk about other Brazilian companies, startups, giving you an overview of what's happening down here. Okay, so I don't know if you all know about Fibri, the Foundation for International Blockchain and Real Estate Expertise. I am a member since 2020, and since 2022, I am also in the board member. I incentivize all of you to access our website, and if you, all my colleagues here today, are not associated of a member of Fibri, I really incentivize you to be an associate, be a member. We're gonna have, we promote a lot of experience and network with all our members worldwide. We are now in more than 50 countries. So just to develop the market. So about Fibri a little bit. Fibri's mission is to accelerate the adoption of blockchain technology in the real estate industry and tangible assets by promoting Web3 concepts. In addition, we aim to provide education, networking, and research opportunities for industry professionals and businesses looking to leverage the benefits of blockchain technology. So if all of you that are watching us and my colleagues here, if you're not a Fibri member, I really incentivize you to browse the website. We also release annually our blockchain real estate industry report. You can access the report with a lot of information. If you're watching us today and you want to go deep into the blockchain real estate market and opportunity, you should download our latest report and read it. It's more than 120 pages of good, excellent content for you to learn about it, okay? And well, let me, now I'm going to change my hat. I was using the Fibri hat. Now I'm going to use the entrepreneur, the Brazilian entrepreneur hat in the tech area. So I'm going to share with you how everything started in 2020. In August 10, 2020, I did the first meetup about blockchain real estate, only about 15 people online and no startups or company doing something about it. I was myself and just one or two more guys in Brazil talking a little bit, talking about real estate tokenization. And in 2021 and 21, in April 6, I did the second meetup, this time with 130 people online because of we were in the COVID time. So, and we couldn't make any in-person events. And on that time, we had just one startup. I'm going to talk about this startup a little bit later today. And finally, in June last year, I did the first edition of the Blockchain Real Estate Summit, and we make it with 250 people attending the event. So that was how the market increased. So this just for you to show how it was. This is the first meetup, in April 6, 21, with 130 people. And then 1 year later, we had this impressive and very, very good event for the Brazilian audience. We're talking about real estate investors, real estate developers, tech guys, blockchain enthusiasts. And I organized this event. We had already 10 sponsors, 10 companies on that time already working and doing something about blockchain and real estate. So, and a new market is being created despite regulatory challenges, right? So we also have our regulatory challenges in Brazil, and it always been an obstacle for initiatives to move forward quickly. And we have just a quick overview on the regulatory framework in Brazil. The CVM, that is the Comissão de Valores Mobiliários, that's the same of CSC in the United States. They are looking very closer to the tokenization of real estate assets, because all the entrepreneurs are, forcing them to study and to establish as quick as possible a regulatory framework for us to issue security tokens. Nowadays, we are not allowed to issue security tokens. But I mean, we are allowed, but we are not obviously allowed to make a public offer of them. So yes, we can tokenize assets, but we cannot make public offers of that assets. So, but the CVM, they already, since last year, they opened a regulatory sandbox, and we already have 5 companies working in this sandbox, and we probably gonna have a regulation coming on next year, maybe the end of this year. I don't believe that, but certainly next year. So despite this, real estate tokenization has evolved well in Brazil over the past 2 years, and we have several initiatives and companies exploring this new market. Brazilian entrepreneurs are very creative, and we use a lot of creativity to develop our market. And I'm going to talk about 3 specific startups. We already have 10 startups in Brazil working and tokenizing or doing something about blockchain and real estate. And I choose specifically 3 of them. I'm going to present a little bit about the three most important initiatives in Brazil. The first one is Insignia. I am a co-founder. The second one is Rebus, from digital to concrete. It's the name. And the other one is NetSpaces. So in Rebus, I'm also a board member. And with NetSpaces, we also have some partnerships. So I'm going to explain each one of them what they are doing. Okay, so tokenizing real estate in Brazil. First of that, Insignia. So Insignia is a blockchain-based platform that allows real estate developers to use the power of blockchain to improve operational efficiency in their process. So we are working with developers. We are studying their needs, and we are developing solutions regarding tokenizing assets, regarding the metaverse, and also using the tokens for a kind of affiliate program. The word just don't come, but what we are trying to do is to introduce the tokens, the use of tokens in the day-by-day blockchain, in the day-by-day real estate market, because people, as you know, we need to teach people how to deal with the tokens before they can invest real money and a lot of money in the tokens. So with Insignia, we did one very good project with a big Brazilian developer, Vitacom. We create a cashback token for them. It's not an investment token. It's a cashback token where people that buy the condo, the apartment, they receive this token and they will receive some discounts on their monthly payment that they have to do for, the maintenance of the building. That comes from the store that is downstairs that is being located, and all the money that is going to be distributed to the token that is going to make the monthly payment more softened. So this is one of the solutions that Insignia developed, and it helped a lot in the marketing initiatives to sell all the apartments. The Insignia platform is built on the Polygon blockchain and offers a range of features such as token creation, transfer, and management. Okay, so Insignia operates in 3 pillars to generate operational efficiency, credit, and funding. So we are also developing products for helping the real estate developers to have credit and funding, and innovation to provide innovative sales and channels using strategies with tokens and NFTs. That's what we are doing in Brazil. The other companies, Rebus, it's a different approach. I'm presenting you guys 3 different approaches that Brazilian startups are taking. This Rebus, it's an ecosystem based on a utility token. So RIB is a utility token for the real estate market, and the company is building an ecosystem for the token. So today you can hire market professionals like architects, lawyers, and engineers. You can also purchase properties with the token. You can also buy furniture and decoration objects, and also you can pay for renting real estate with the RIB token. So the token is already, it's a utility token, and it's been authorized by CVM, as you can see here, the Comissão de Valores Mobiliários. So it's they received an official letter acknowledging that Rebus token is not as considered a security. So they are allowed to negotiate and to offer the token on the Brazilian exchanges. So this is the Rebus ecosystem. They have the heterophytos, the recibos, that all the verticals that the token can be applied. We don't have too much time for me to explain all of these verticals, but they all accept and negotiate the tokens for like the permutos doing permutation with real estate, the heterophytos to make heterofit, the beneficiaries like a loyalty program, and there are many use cases for the token. So that's a very intelligent and a creative way that the Brazilian startup is using tokens in Brazil in the real estate marketing. And finally, we have the NetSpaces. NetSpaces is also a tokenization platform. They are more like a tokenization in the property itself, like tokenizing properties for fractionalization and the transfer of the property using tokens. So specifically where they operate is south of Brazil. The government and the law, specifically in the south of Brazil, allow them to issue tokens that representing ownership in real estate assets. The platform is built on Ethereum blockchain and offer a range of features such as token creation, transfer, and management. So this is the way I wanted to give you an overview in the Brazilian market. We're gonna have a new event this year in June 17. It's the second edition of the Blockchain Real Estate Summit. We're going to approach also AI as a new technology for real estate besides blockchain. And it's going to be in Brazil in June 17. You're all invited to be here. So thanks a lot. I'm available if you have any question.
Rubens, thank you so much. Another great presentation.
Not listening to you, Jason.
Fantastic. Yes, please. Yes, definitely share that with everyone. I think it's great that we're all trying to collaborate on these kinds of missions here to create more clarity on regulatory framework and best practices for what's going on with tokenization, which I'm sure we all here can agree is the future of finance. So yes, fantastic. Rubens, thank you. Everyone keep bringing in your questions. We're going to be moving on to our final, but last but not least, a speaker here, Rodolfo Monsberger. He has more than 22 years of experience in the financial sector as a consultant, entrepreneur, and trainer. He specializes in process optimization, credit risk, institutional strengthening, strategic planning, and fintech, areas in which he has carried out projects for the World Bank and the Inter-American Development Bank, among others. Currently, he is a postgraduate lecturer of strategic management and governance at Vasco University in Ecuador. Additionally, he is managing director of the German Sparkassen Foundation in Argentina, a worldwide organization specialized in financial inclusion. He holds 3 master's degrees in management, banking, and fintech from Graz University, Heriot-Watt University, and National College of Ireland, respectively. Now, as founder and CEO of Bimount, a startup specialized in blockchain technology focused on transparency and accountability, he has developed a fund traceability tool with a great versatility of use cases. Rodolfo, thank you for joining us. Tell us more about tokenized forests and what you're seeing in that market.
So thank you, Jason. Thank you, everyone. I said before, so as Jason has said, my background is in financial inclusion, but after I finished my master's degree in Ireland in fintech, the National College of Ireland made me the proposal to carry on with my final project and to create a company that is Bimount, where the National College of Ireland is a minor shareholders, and where I'm CEO and founder of Bimount. So let me show you a presentation. Just a second. I hope you can see that. Good. Thank you, DigiShares and Klaus, for this invitation. For me, it is a pleasure to introduce Bimount. Bimount is a company focused on blockchain technology with applications in asset tokenizations and funds traceability. Our mission and vision in Bimount is to achieve more transparency, both in private projects and in triple impact projects. The company is based in Ireland, although the current presentation today is about a project in Latin America. Well, next I will present the forestry project in Argentina. So humanity is facing serious environmental problems, and I am convinced that blockchain and forest assets tokenization can be a fundamental tool to halt this trend and eventually to reverse it. This project is led by Bimount, my company, and in cooperation with the German company with forest assets in north of Argentina. The company which is also specialized in forest management and conservation. So problems, so we have a lot of problems. We are facing severe problems regarding the climate change. We can say that after 25 years, the Kyoto Protocol has not been accomplished so far. So there is an urgent need for a serious, transparent environmental project. Here are some facts according to very reliable sources. So based on these sources, deforestation accounts for 10 to 15 million hectares per year. It also accounts for 15% of global greenhouse gas emissions. Greenwashing is a widespread practice, so unfortunately. So there are studies that suggest that 40% of funds or companies that claim to be green actually are engaged in greenwashing, misleading investors on environmental impact. So there is also a lack of transparency. So the carbon offset market has no universally accepted standards. And this means that it hinders the trust and potential investment that can happen. So the private initiative must fill this gap with honest and transparent solutions. We have also funding gaps. Based on the Paulson Institute, there is a $300 billion gap when it comes to get resources or to fight climate change. We have also a monetization challenge. A nature-based solution could provide 37% of climate mitigation, but receive only 3% of public climate funding. On the other hand, the demand surge, 72% of investors consider ESG factors, so environmental, social, and government factors. And the green market reached $35 trillion in 2020. And finally, we have also a displacement issue. More than 130 million indigenous people depend on forests. However, 40 to 50% of protected areas displace them, violating human rights, and undermining, finally, the conservation project. There are a lot of NGOs catching up those companies and projects that are violating these rights. So to recap, there are land-based conservation activities that desperately need finance to restore or maintain nature and biodiversity. On the demand side, private citizens, investors, financial institutions, sustainably oriented companies don't have the structure or auditable way to invest in nature positive projects. The solution, well, we believe that the solution could be blockchain. Blockchain can democratize the land tenure, and blockchain can also be used to provide funds traceability so that investors know where the money is going and if this money is having an impact or not. Our solution has a holistic approach comprising several issues related to ESG objectives. On the one hand, we are going to offer the tokenization of forest land at the rate of 1 square meter for €1, ensuring protection for 10 years. This rate could change depending on the marketing strategy, but basically this is the basic calculation we have. Secondly, token holders could visit the projects and stay in an eco-friendly accommodation. And finally, we will provide education and fair trade for indigenous and local people. So the objective is to train and empower them endorsing fair trade and offer them the possibility of of selling the sustainable products in different platforms at a fair price in general. Yes. Well, the value proposition is multiple, and each of them is related to a technological solution. The first problem is land and forest concentration. There are landowners controlling vast areas who replace forests by crops and livestock. The lack of funds to combat deforestation exacerbates this issue, this situation. So for this problem, we believe that the solution could be a digital platform, so for a platform for tokenization. The forest tokenization can provide a greater liquidity, a fractionalized land tenure, and thus democratize the ownership and management. I think this is very important because concentration is going to be a huge obstacle for all kinds of climate change initiatives, and a way of reducing power of these big or large landowners is to democratize the land tenure in as many investors as possible. The second problem is the absence of reliable, transparent tools to know where the money is going. So many individuals and organizations are eager to fight climate change. You know, everyone is a fan of stopping the climate change, but they lack trustworthy mechanisms to ensure the investment have a genuine impact and are being used as they are supposed to be used. I'm going to talk about this later, but basically the solution is based on Beaumont funds routing system, which ensures the proper use of investors' money. The third problem we are facing and that we are going to cope with the technological solution is the inadequate impact measurement. So investors want to know also what impact is having the money in this kind of project. Conservation projects often lack a comprehensive system to measure their effort, making it difficult to gauge their success and attract further investment. The solution we propose here is based on tools like remote sensing and satellite images, which can improve impact measurement. So all these technological solution could be financed with €1 per 1 square meter. Now, what is this funds routing system about? We call it BM Trust. This is a mixture between trust and tracking. First MVP has already been integrated into DigiShares platform. Now we are moving forward with the final version of the prototype, which will be implemented in this forestry project. So basically, it is about giving certainty to investors that the funds will be used as agreed in the contract. It works with an escrow account which transfers the money to pre-approved wallet accounts, so that investors have in real time a report that tell them what is going on with their money. So the who are investors or the persona we are aiming at, while achieving focus is fundamental in any marketing project, we believe that this product can be attractive and appealing to both retail and institutional investors. This is an issue yet to be identified with market research, but we believe that both segments can be tackle with this kind of initiative and project. Apart from technology, we also have land and forest. So our German partner owns 20,000 hectares located in the province of Salta, in the north of Argentina. So that we can imagine this 20,000 hectares are 200 million square meters. Although the number is impressive, even more when we translate this 200 million square meters into euros or dollars, it is still a modest number compared to the 10 to 15 million hectares deforested per year on the planet. So we need desperately to take action on this issue. So we are convinced this is a fascinating use case of asset tokenization. We still have many challenges ahead of us, but the project has all the ingredients to provide certainty for investors so that it will not be another disappointing greenwashing story. We cannot expect the government to accomplish anything. As said before, the Kyoto Protocol is still not accomplished after 25 years. So I believe that the private initiative has to close the gap with honest projects. So that's it. Thank you very much for listening. I am open to any question.
Amazing. Amazing. Thank you, Rodolfo. At this time, we're going to loop right into our fireside chat and AMA. So if you guys have questions, either from previous presentations or as we discuss during the fireside chat, please insert them. So if I can ask all the participants to go ahead and turn on their video so we can get started with our chat. In the meantime, I do want to thank DigiShares for putting this together. Very well organized webinar, a great breadth and plethora of speakers here from different perspectives all around Latin America on what they're doing, as well as not just real estate, but other things such as forestation and whatnot and regulation. So definitely a huge shout out to DigiShares. Thank you for that. So fantastic. Thank you, panelists, for joining us. We'll start with a layup, if you will. For each of you, where do you think tokenization is going to be in maybe 10 years and 20 years from now?
Want to start? Myself? Okay.
Go for it.
Well, I am very enthusiastic about that. I know that we have a curve of learning, and well, crypto and tokens are pretty new. In Brazil, we have a 200 million population and only like 2 or 3 million people that are touching tokens and crypto. So we have a very long curve of learning about that. And as a new technology, I think that for a complete change and adoption, we're gonna take like a decade, maybe less, but I believe that in 8 to 10 years, like the mobile, like mobile took like 10 years to reach the majority. So I believe that crypto and tokens and investing in real estate tokens, as Juan told before, it's going to take a while, but it's going to happen. And in 10 years, I believe that it's going to be very used on the day-by-day basis. People are going to invest and buy real estate using tokens, and we're gonna have all the regulations set up, and it's not going to be a big challenge, because now it's a big challenge for everyone here. So and it's going to take a while. And I understand, the regulators, they want to protect the investors, and they don't want many people that want to take advantage of, people don't understanding well what is the token. And we always have these Ponzi schemes, people being, so in 10 years, this is going to be huge. And I believe that trillions of billions, hundreds of billions of real estate and other real estate assets are going to be tokenized and distributed by many exchanges, all over the world. That's my opinion.
Anyone else in the panel have any thoughts on this?
Yeah, well, I just like our 2 cents in the matter are, you know, you're talking a lot about real estate, Rubens, and yeah, we believe a lot in the real estate tokenization industry. We do think that in probably 10 years, regulation is always evolving. Probably in 10 years, and it's gonna be a very decisive point in terms of how hard is it or how accessible really these investments become for the people, right? Not because we are still talking about accredited investors. We're still talking about people that have ultra high net worth. So this is not yet a product that everyone else can start purchasing right now. So hopefully that's something that we can, you know, keep pushing towards. Of course, outside the US, that's a different story, but in general, it's still not that accessible. But we do see a huge amount or number of new players in the industry. As we mentioned during our presentation, when we started 2 years ago, there were probably a handful of players, probably 5 or even less, even fewer than that were actually tokenizing anything. In that case, it was real estate. Today, we see hundreds of new players. Of course, some of them are just getting started in the market. There's a lot of education yet to be done, but there are many new players that are doing that job, you know, educating the consumer, educating the public, educating people into what a security token is, not only real estate, but other assets. We've seen art, we've seen different funds from different natures being tokenized. Of course, real estate is one of our favorite so far. But we do see a lot of different assets being tokenized and a lot of new commerce into this market that hopefully at some point they will be allowed to access easier, right? In an easier way, I guess. So I would say at the rate that the market is growing so far, we've seen probably like a 250% increase on a yearly basis since 2020. So, I mean, that's gonna keep going, right? And that's what we are seeing every day. So definitely, it's gonna be very interesting in a couple of years where, you know, also there's a more structured secondary market, more specifically, right? Where you can actually hopefully provide that promise of liquidity, right? That's what we're waiting for. That's what we want to offer everyone that access that comes to this market, and it's a way to, you know, you can enter this market and exit it whenever you want, that easy. So hopefully we'll see that in probably 10 years, 15 years, that will be something that will be working perfectly.
Fantastic. Do you guys think that public markets are going to transition over to a tokenized structure, or do you think the public markets are going to stay in the more traditional environment?
Well, I guess it's going to be a hybrid still. I mean, we are seeing it. We see a lot of people wanting to adopt. I guess if we're talking about 15 years, we are probably going to see a big transition into tokenized assets, just because of the fact that you can start trading 24/7, 365 days a year, right? So probably it takes time. You know, at this point, the traditional securities market works. So you know, there's not a specific reason or a pain point that actually triggers that change towards security tokens. But I mean, eventually they will take over, just because, you know, little by little, if this becomes more efficient, more liquid, then it will naturally make more sense to go to an asset that you can trade at any time with smaller transaction fees, rather than stay in the traditional.
To complete what you're saying, I think the combination of the the concept of decentralized finance with the inclusion of the government and the government overseeing what people is doing out there in fintech to avoid what has happened with FTX. Combination of DeFi and CeFi, you know, decentralized, centralized, will make the evolution of the industry faster and safer, so that people can actually just complete massification of the real estate tokenization and the adoption of the same concept for securities, debt, and anything else that is suitable for tokenization, which is any asset under the concept of digitalization of assets. I think that's the way to add my 2 cents.
Sure thing. Yeah, I mean, as we see more, data come in terms of, cost savings that comes associated with tokenizing or simply just operating on a blockchain, I'm sure that, we'll see different markets switch over. Obviously we see KKR, Hamilton Lane, we see BlackRock, all mentioning tokenization and their exploration in this. So as much as, retail is obviously, for this as well, we also see the institutions moving over. And of course, they have a lot of influence in both public and private markets. So shifting over a little bit more to the regulatory landscape of Latin America, as we've discussed multiple times throughout this webinar, it sounds like certain countries do have more established guidelines, and then we have other ones that not so much, right? And so Ari, specifically for you, we talked about how the Eastern Caribbean has that direct legislation, right? And so how does this impact North American businesses? Do you think that they're going to transition over to the Caribbean? And if they do, how hard is that transition for an entity to shift over? And what would the incentive be to do so?
Yeah, that's a great question. So there's regulatory certainty for a company who wants to set up shop and say any of those jurisdictions in the Caribbean that have a virtual asset or a digital asset law in place, or securities law that facilitates it. And the problems that are identified in, say, the US market with bringing offerings to the public are addressed, such as, excluding non-accredited investors, secondary trading and liquidity. A lot of these legislation address those issues specifically. Now, the problem is if I'm an American company, or if I'm a European company, or I'm a Brazilian company that want to set up in Cayman Islands, generally, I'm not setting up in there to sell to Caymanians. I'm doing so to sell back home the tokens to my investor base. And the challenge is that the problem with securities laws is that it's the jurisdiction of the investor generally that is affected, and it's not the jurisdiction in which you are making the offering from. So even though I have a license and I'm totally compliant in, say, the Eastern Caribbean, that doesn't mean that I can just go and start doing a public offering within the United States. I'd have to be very cognizant of including US investors. And that's the issue. Now, what we are doing with Utopia and our platform is we are focusing on people in the region that are traditionally shut out. And the legislation works very, very well for that domestic or regional investment base. So I think it depends on what challenge you're trying to address, who you're marketing the tokens to. That would generally really guide you on where, what jurisdiction you may or may not decide to operate out of. But yes, the Caribbean has very progressive legislation. The regulation is in place to set up like a real estate tokenization business quite cost effectively.
Gotcha. Yeah, no, it makes sense, right? Obviously the investor, or most, the SEC, obviously we all know, is their main job is to protect the investor, right? As well as most regulators around the world. And so that makes perfect sense, right? In terms of which jurisdiction kicks in. Unfortunately, we are running up on time. So the last question I have for you guys is, for anyone that's getting started with tokenization, what do you think they need to clarify? Juan, I know that you mentioned earlier the security token advisors, we helped you navigate the landscape here. So from your experience there and your own experience, as well as for all of you, what would each of you say is something like super important that people need to understand first before they dive into tokenizing an asset?
Okay.
Well,
Oh,
sorry.
go ahead.
Okay.
please.
No, I would like to stress the following. I think so in this process of educating people, we believe that they have to be very clear what exactly tokenization means. Tokenization means no traceability, which means so you can have the traceability of a token that represent an asset, but you don't know where the money that you transfer to this investment project is going. You don't know where this money is going. That's why at Bimon we made the decision to provide also certainty to investors so that they have traceability or a track about the token that they have already bought. And this can be, of course, seen in the platform, but they also know where the money is flowing, how the money is being used. And I think this is a kind of bridge between the complete decentralized project and decentralization. When you centralize decision making, you are running the risk of a third party that is going to make decision for you, and you don't know what happened with money you invested. When you decentralize everything, yes, you are not. You could face a different problem like a pandemic, and you have to turn off the decentralization and automation and make decision, because otherwise you cannot cope with this special situation, which means that you need a kind of bridge between centralization and decentralization, and provide investors with a tool that can provide them with a kind of certainty what is going on with their money.
If I may, I would add, as I said before, I mean, it's certainty. I think that one of the key variables here is providing certainty to whoever owns the asset. What do I own? Understanding what do I own, and that's obviously has a education angle and a gap to be bridged, because if this wants to have the necessary scale, at some stage you need to tap on the retail segments, and that it's a huge educational effort on one hand, and on the other, the legal certainty of what I own. I mean, in the extreme, even having something registered, as you register a stock, you register a bond, you register whatever security. I mean, it's probably mimicking some sort of registrational attribute. I mean, that it's key for somebody to understand, what do I have? What do I own? Who can I ask for details on what I own? What was made with the money I invested? And that's the technology has solved that. I mean, that we need to work on more the institutional framework or the institutional sides. I mean, of providing the fortitude necessary for creating the confidence, because at the end of the day, all financial markets work on the basis of confidence and trust, that what I own is really what the paper needs, or the digital version needs I own.
Sure thing. Any other last minute thoughts on that?
I think you are muted, Jason. We couldn't hear you.
Yeah, Jason, we couldn't hear you.
How about now?
Now,
Yeah, no.
Oh, I was just asking if there are any other last minute thoughts on what we just discussed here.
Well, if I have to drop a quick note there, I would also say from the practical side for this newcomers is basically to have a very clear idea or target of what they're gonna be tokenizing and who they are gonna target it to, right? Because that's one of the big issues that we've faced so far, which is, we can tokenize real estate, it's real estate, and then we can go target the same investors that we've been targeting over the years, but it turns out it's not that direct of a path, I would say. There are many different conditions that you need to find in an investor that's willing to switch from a traditional real estate investing fund to a tokenized offering, right? So I would say to keep it very clear, very lean in terms of the asset that's being tokenized, the type of asset or types of assets that they're going to be tokenizing, and what the specific target is for that specific asset as well. So that will probably make things a little bit easier for scalability and to start like probably replicating the model through the different types of assets with a very specific audience that's purchasing the tokens.
Very good. Awesome. Well, thank you so much to all the panelists and DigiShares for putting this together and joining us today. Full of insights today for everyone listening in. And, I hope we keep the conversation going, whether it's on LinkedIn, on future webinars. Check us out at stm.co as well. We do have our weekly STM lives every Thursday at 1 p.m. So more of these types of conversations from different people in the industry to be able to either curate new ideas and learn from each other based on what we're learning from each other's experience. So thank you all. I appreciate your time.